This video is 8 things to do about the approaching recession or depression that we're about to face. And of the 8 steps, there's a lot of things that you're going to want to see. We've got an ugly duckling that's about to turn into a swan. We'll talk a little bit about sidestepping some risks. I'm also going to, most importantly, tell you the opportunity or the moment when to spring, when to back up the truck. Just load up all that you can. But the best part of this video, and it's right near the end, and I'm not trying to get you to watch it further. I'm just saying the best part of the video is the longest part, and it's right at the end, number 8. We're going to talk about what to do in different scenarios, whether a recession, a depression, or maybe even a soft landing. And I know you guys understand that we never give out personalized trading advice. We're just giving you our educated opinions so you can take our information, absorb it in with the rest of the other things you know, and make your own decisions. Nothing here is personalized trading advice. So, number 1. Now you guys know I'm going to say this, so let's get to it. Number 1 right away, just to get out of the way. I think that every single person should own some physical, pure silver or gold. At very least, you want to own some of the gold mining stocks, especially at the prices they're at right now, in my opinion. Gold is nature's insurance. Typically, not now with the war in Ukraine for some reason, typically when there's global conflict, gold prices tend to increase. And when there's monetary creation, the likes of which we've never seen before, what we're seeing lately in America, that will invariably make it cost more dollars to buy the same asset. That's what's going to make the price of gold increase. It'll take more dollars. The value of the currency will decline. It's an actual impossibility that gold prices will not climb in the face of all this monetary creation. Things get delayed for a while, but the truth always comes out. The biggest problem for gold lately, and you've seen it's coming down a lot lately, relatively a lot, is that the American dollar is doing so well. It's blowing away the yen, the euro. It's going to be approaching parity with the British pound. A lot of interest is going to the American dollar right now, making the dollar stronger, which makes it seem like it'll cost less to buy gold. So the price of gold seems to be declining. I believe we've reached peak American dollar, but I keep saying that and it just keeps on going. It can't go too much further without causing an entire global financial reckoning. Likely what's going to happen, in my opinion, is that the American dollar is going to start declining in value. And when that happens, it'll seem like the price of gold is really starting to soar. All right, cool. Let's do number 2. I would suggest, in my opinion, I don't know what's best for you, I would suggest that you get out of a lot of these more speculative investments, a lot of the risk-on investments, the high-flying technology stocks. But I've been saying that for a while. At this point, you might want to just hold them now. You've already lost much of the value from the peak to where it is now. It might go lower still. I think it will go lower still. And in fact, if you remember the last video I did, I was saying that 6 things have to happen before we get out of this downward trajectory on the stock market and the economy. But I would even suggest cryptocurrencies. You might want to stay out of this speculation a little bit right now until things cool down. And I'll tell you a little bit later in this video the time when you should be buying heavily in both Bitcoin and Ethereum, but we'll get to that in a second. Add to that, I think that real estate's another one that you want to be careful and maybe step out of or sidestep, because I do expect the value of real estate to decline significantly from here. But I guess if you think about it, at this point, if you didn't listen to me for the last couple of years, what's going to make you listen to me now? So I guess just ignore me. This is from the Washington Post. Central banks in almost every major economy are tightening credit. That means that they're all raising interest rates, not just in America, but in many countries. I showed in the last video all the countries that are raising rates right now worldwide in the middle of an economic global slowdown. But anyways, central banks, almost every major currency, tightening credit in hopes of cooling pricing pressures. Those higher rates are roiling currency markets and forcing investors to reassess the value of stocks and bonds that they purchased, assuming that interest rates would remain near zero. That's just another way, or a fancy way of saying that stocks have been coming down and they're readjusting, they're repricing themselves, and the final destination will most likely be a lot lower unless you want to watch somebody else's YouTube videos. I think it'll be lower first before it goes higher. But to be clear here, The world's not going to explode. We're not all going to end up impoverished and living on the streets and have no retirement savings. I'm just telling you what I see, and a lot of it's very heavy, very negative right now, but it's not as though we're all going to end up homeless. Clearly, many of us will, certainly not most. And of course, none of the people that are watching these videos, people get their first introduction to me on a lot of these videos talking about the economy being in such terrible shape. Overall, though, deep down in my bones, and if you knew me personally, you would know that I'm an optimist. I'm always looking for opportunities. And on that note, you should be ready, because one of the best buying opportunities ever is setting up. And it won't be anytime soon. It'll be on the other side of this downdraft that we're experiencing. This economic clown show that is being put on all our shoulders. But back to the opportunity. When the market does bottom, we have capitulation points and things like real estate or cryptocurrencies. I'll tell you on this channel all about it at the time, but it'll be a little while yet before that happens. But when it happens, you should be already set up. You should be getting ready for the bounce, basically, where it's going to rebound really quickly and really significantly. Even if you're a newer investor, that'll be a great time to invest in the stock market. And don't even think about it. Just buy index funds and be done. You're going to want to get back into all the speculative stuff that you should be getting out of right now. That includes real estate and a lot of the assets, a lot of the stocks, bonds even, cryptocurrencies. But you might wonder why I always say Bitcoin or Ethereum only. The reason for that is I look at cryptocurrencies from a psychological perspective. That's why I was talking about how the two problems with the cryptos is saturation and fragmentation. But if you look at it from the perspective of the way people's minds work, I know that there's people who really love cryptos and understand them and get into the technology. That's not the aspect I'm looking at them from. If you go, pick any continent in the world, not the one you're on, pick any other continent. You got one? Now picture yourself there at a coffee shop sitting across the table from somebody who is from that location. They speak the same language as you for whatever reason. Ask them, hey, are you getting into cryptocurrencies? They say, yeah. And you say, well, what are you going to buy? They might buy Bitcoin. They might buy Ethereum. They might buy Beercoin. They might buy whatever. But after Bitcoin and Ethereum, the mental recognition, the place in people's minds of it holds that spot in their mind. If you think I'll get into cryptos, the first thing you think is Bitcoin. And then you think Ethereum. And then the third option, if there is one with most people, and often there isn't, but if there is one, it could be any one of 1,000 options. That's why third place doesn't matter. Place number 1 and 2 matters. With anything, Burger King, McDonald's, Target, Walmart, Cracker Barrel, Bob Evans. It's kind of like if you buy a new car, you are most likely, percentage-wise, going to drive the exact same make of car that you already drive. And it's not because of loyalty and love of the car. Often it is, but if you take everybody that buys a car that doesn't buy the same car, the same make, that then fragments into hundreds and dozens of options. They might buy a BMW, they might buy a Ford, they might buy a Honda. Whereas you're most likely percentage-wise, if you drive a BMW, to buy another BMW. That's another effect of fragmentation. I'm a grumpy old man now, and so I'm going to sound like that in this part. Number 4, pay down your debts. Spend less money. I'm not kidding, it sucks. But spend less money. Adjust your lifestyle. Save up. So any way you can save money right now, this is the time to do it. You don't always have to save money. You don't always have to watch what you spend. Right now is the time to save money. And now 5th out of 8 things to do to get ready for the approaching coming recession or depression. Step 5 is about preparation. Preparing your mind to eventually come to terms with the fact that what I told you years ago is playing exactly like I told you it would. You got to prepare your financial situation, get your financial house in order. Even if you're a prepper, maybe. I'm not going to be the one to tell you, yes, get ammunition and a rain barrel and a bunch of dehydrated food. But I'm not going to tell you not to do it. Everyone should do what they think is best. I'm telling you, I think that the economy and the investing environment will be problematic. And there's a lot of things that come from that, not just about money. And that's going to mean that everything in the world around you is going to start to shift a little bit. And you're going to notice it when it all starts to combine together. One of the things if you want to prepare is maybe get some silver, physical silver. And I know I talked about it earlier, but the thing is it's good for bartering, and it's a lot cheaper than gold. If you buy $1,000 worth of gold or $1,000 worth of silver, they'll both perform approximately equivalently, give or take, depending. Sometimes gold does better, sometimes silver does better. But if you look at the silver to gold ratio, how many ounces of silver it takes to buy 1 ounce of gold, it's at a very low historical level at this point. It's more likely that silver will increase by more than gold, but it'll be approximately the same. If gold's doing really well, platinum's going to do really well, palladium's going to do really well, and sometimes they individually perform better or weaker than another one, but it doesn't matter. You just invest in actual sound money. That's what you're doing. Number 6. This is a heavy one, and it's a good one, especially since you can think about it on your drive to work. You got to have an audit. You got to give yourself a personal audit. How much do you owe? Where's money coming from? How secure is your job? Which dependents do you have? Is that number of people that you have to help out, is that going to increase as the economy gets more discombobulated? Just so you know, yes, it will. But you're going to have more dependents. You got to know where the money's coming from and how secure it is, and what happens if you lose your job. Think about all of these kinds of things. You give yourself a personal audit and say, here's a snapshot of where I am, where I want to go, and then you calculate what's involved to get there, and if it's even realistic. But take the time to really go through the different aspects of your life in a situation where you're going to need to know where everything is, where all the places are and pieces are, and who you have to help out and who's going to help you out, all of that stuff. Second last one, number 7, educate yourself. You have the entire culmination of all human knowledge at your fingertips on your phone right now. There's no reason why you shouldn't know anything you want to know. So educate yourself, things about the economy, besides these videos. There's other people too, and there's other news sources too. And it doesn't matter if you don't like a news source or if you don't like a certain person. It's still valuable to you to take in some of their opinion. I watch stuff all the time that I don't agree with, and I'm pretty sure I know that they are wrong, but I want to watch to see why are they saying that their belief is this other thing that I'm not agreeing with. And number 8, here's my favorite one. This is the longest one. It's the best one. Check out everything I say in this section. I think you should workshop or plan out various events and really think about how it's going to play out so you spot all these opportunities. I'll show you exactly all these opportunities. For example, you have a recession. So what happens then? You know that unemployment will increase as a result of the layoffs. Inflation itself will cool down a bit. People will spend less money. Velocity money will have pressure against it, cooling it off. There'll be inventory gluts, blowout sales, food and fuel, including gasoline prices, will come down. And I believe there's going to be a big slide in real estate prices, increases in fraud and delinquencies, people operating on a shoestring budget, whether it's a family or a business, even some of these municipal organizations. Small business owners are going to be hurt pretty badly by a recession. Retail space will decline in price. So if you're thinking about signing a lease for retail space, wait a little bit and sign it for better terms for you. Civil unrest will increase as it does in any kind of economic downturn. And so basically, to summarize, your overall quality of life will be swimming against the current. In that paragraph right there, there's so many investment opportunities. Dozens and dozens, probably over 100. I'll give you 5 of them off the top of my head, but there's a lot more in there too if you look. When all this plays out and the recession comes to town, you're going to have people who more increasingly will turn to sin industries. That means alcohol, gambling, porn, cigarettes. I'll add marijuana to that too. People will smoke more pot. Companies that are involved with security, they'll do better, especially security cameras and some of the technologies that people buy more of when civil unrest begins to creep higher. If you're thinking about signing a retail lease, wait for a bit. Time's on your side. You want to buy something? Wait until it's a blowout. They're giving it away for half price or less. And by the way, if you want to buy a car, used or new, prices will be lower 6 months from now than they are right now. Probably meaningfully. So you see in this paragraph, there's all sorts of other opportunities in there. I mean, look at anything. Real estate prices are going to come down. If that happens, then what does that mean? It means that real estate financing companies will be under pressure. Real estate agents will make less money. Real estate firms will have to lay off some of their agents possibly. And there's dozens and dozens more opportunities from that setup, that situation. I don't want to tell you, here's what you do. I want to tell you how to think about what you could do, how to find opportunities, how to find leads about what you want to invest in. You have to come up with this on your own. You find your own knowledge and your own information to back up your thoughts. And if you're good at investing, that means that at the end of the day, you're going to be making a pretty good amount of money from investing smart. Now, what if we have a depression? Just like a recession, only it's longer and more serious, and it'll affect you more likely than not. In a depression, you'll be looking at renting out your extra room in the basement. You'll be asking your neighbors if they want to buy your car. Things will be serious. Things will be heavy in a depression. And that's the type of thing that I could see it lasting for more than a decade. Japan's on 4 decades. We're going into the same thing that they just did. But the other aspect that you might have heard a little bit about that other people are touting from time to time is a soft landing. I always want to say to these people that believe we're going to have a soft landing, I always want to say, oh great, so I guess everything's been solved and taken care of. Everything will be wonderful forever. Well, yeah, I'll tell you what, maybe we have a soft landing. We certainly don't deserve one. We deserve a depression for years based on the economic setup that we've put ourselves into. And I say put ourselves. You didn't do anything. I didn't do anything. The powers that be who were elected, who should have known better, have made all sorts of horrendous choices. And now you're seeing it all come to fruition. See, people say, yeah, we'll have a soft landing because they're looking at things through rose-colored glasses. One of the things they say, and a lot of times they heard this snippet from somebody else on YouTube or something, so they foist it onto me. They'll say, yeah, well, the American government can't go bankrupt, can't default because they can just print all the money. Well, yeah, technically they won't ever go bankrupt. Technically they can just make up more and more money. So can Zimbabwe. There's always negative consequences to these decisions. Oh my gosh, we have to give the people a whole bunch of money, and you think that it's problem and money, problem solved. What happens when you create that money, or you have money that's already being created and you give it out for different programs? That hurts everybody incrementally, a very small slice, but it's death by 1,000 cuts. All these mistakes coming together, and now what are we doing? We're all trying to figure out how to best emerge from this economic train crash. I would suggest to all these people that are looking for a soft landing to prepare for reality. Maybe if you think that there's going to be a soft landing, that means that you're just completely ignoring the colossal and unpayable debt loads that are on our shoulders, which will be at $35.8 trillion by the end of 2031. And that's not even counting the trillions in unfunded liabilities which are owed to the oldest and weakest among us. This is what I'm talking about, the unfunded liabilities. That's admittedly not going to be paid. You guys are aware of this, yes? This is from Truth in Accounting about the unfunded liabilities. In the center square, the U.S. national debt is closer to $123 trillion. More than 4 times what the Treasury Department is reporting. Chicago-based Truth in Accounting calculates in its new annual analysis of the nation's finances. It's bad, you guys. No one is even talking about it properly or caring. Not on the street, not the regular guy. This is going to be really bad. The federal government has $5.95 trillion in assets and $129 trillion in debts. They are underwater by $123 trillion. And they're going to say the debt burden, therefore, is $796,000 per American household. If you're an American household, you just realize that I know exactly what I'm talking about, that this debt cannot and will not be paid. Because of this massive amount of debt and repeatedly poor financial decisions made by lawmakers. Thank you, Truth in Accounting, for agreeing with Peter Leeds. Truth in Accounting gave the U.S. government an F grade for its financial condition. The United States government debt is estimated to have reached 137% of the country's gross domestic product in 2021. And that's from the Office of Management and Budget of the White House. GDP is used by investors to measure a country's ability to make future payments on its debt, thus affecting the country borrowing costs and government bond yields. Just to pull it all together for you guys, I'll show you some really quick charts here proving out a lot of stuff I've been talking about. This is the GDP growth rate. This is the U.S. gross federal debt to GDP. Here's the trends in new home sales. But anyways, if you want to take all of these unfunded liabilities and just throw them out, pretend they don't exist. Take all the debts that we owe. We just said $796,000 per U.S. household. Take all of that and just throw it away. Pretend somebody will just come along and give a debt jubilee and you won't have to pay it, okay? Considering that we had no debt, which would mean we wouldn't have billions of dollars in interest charges for the carrying costs of the said debt. If we had no debt and it was all just suddenly taken care of, you would then have to just ignore the ongoing and historically shocking negative trade deficits. The latest one was a shortfall of $859 billion for the fiscal 2021. Think of it this way. The trade deficit, the bigger the number, the more wealth is going from this country to other countries. If the trade deficit gets bigger, that means we're sending even more money overseas, buying stuff from them. They're getting all the GDP. We're getting the products, and the economy is just rotting beneath our feet. And of course, you'd have to also ignore the completely irresponsible overprinting of the American dollar, and it's being pushed out to everybody overseas, or they're accepting it one way or the other. There's so many US dollars in existence, and they don't show any signs of slowing down, meaning that there's a lot of negative winds that are going to be affecting stocks, bonds, the economy, cryptocurrencies, real estate in the next coming months. And going quarters forward, years forward, it just looks bleaker and bleaker. I'm not trying to scare you. I'm trying to tell you moves you can make, and maybe on the other side of this, you're actually in a better place than somebody's not aware of all this. Somebody's not paying attention. I put my money where my mouth is. I'm wrong on gold. I'm all in there, man. This is the single best time ever to buy investments related to gold mining, to actual physical gold. And I believe that there's a lot of points in this video that would be really helpful to some people. If you don't mind scaring them a little bit, they maybe need to know about this stuff. And all you have to do is press that little arrow button beneath this video and you can share it directly with them in 2 seconds. Help us out. All right, I love you guys. You're awesome. And I'll have more videos for you coming up real soon.